folks. A little bit of a new wrinkle here. As you can see, there's a Gary right up here. So you can see him talking to you for the first time while talking about his charts. And I wanted to use the indicator charts page, which is fairly new and freely available for anyone who wants to hit that menu item, come here and check out all the ratio charts that are important for me in trying to understand what's going on beneath the surface of the markets. So these can be manipulated for time frames, tools here, every tool you could want. There are moving averages, you name it, you can manipulate it. But I'm just going to look at these daily chart views. And so the gold-silver ratio using GLD SLV, which a lot of these charts do. I'm using associated ETFs, but I'll call it by the market's name, gold-silver ratio. And it's Tank City, just as when it got to an extreme, which doesn't look so extreme now, but we had noted an extreme downside in the silver-gold ratio was likely to reverse upward at some point, and the gold-silver ratio would reverse down, and that's what we got. And this is extreme on longer-term views, as we've discussed in the weeks leading up to this. And I expect a reversal at some point before long. That would bring pressure to the precious metals, because I would assume it would mean nominal prices are declining, with silver declining more than gold. Gold SPX has been great, busted into the new macro the way it should. If we go back further on this chart, we'd see that this is a breakout from a base. I think there's a long way to go in the coming years. Meanwhile, I also think there is vulnerability here. And if there's any modicum of vulnerability for gold related to the stock market, that goes quadruple for silver. I think silver busted into a new macro as well, but this is way overdone and will very likely get corrected. Gold copper shows the opposite of inflationary cyclical. And when I say that, I mean inflation that is working to benefit the economy. We're in a disinflationary phase now. I'm not sure what's ahead, whether it's the next step is continued disinflation, possibly even Goldilocks favoring tech stocks and growth stocks, or a deflationary episode, which wouldn't favor much of anybody, or stagflation. But going back to the gold-silver ratio and its likelihood, I'd say, to reverse upward, I'm going to say that stagflation, inflation are not the next things to be concerned about. It's either going to be, in my opinion, disinflation, pleasant Goldilocks, or something worse, a liquidity crisis that hits most markets. Gold oil, very nice for gold mining, but is it as good as it gets for this phase of the gold miner bull? I don't know, but I don't want to jump to too many conclusions when this is still rising handily. I do have a hunch oil is going to go up and possibly break this ratio down. In other words, oil may start to outperform gold in the short term, but that's just a guess and speculation. But to this point, you can see the baked-in positive fundamentals for gold mining. They say that about 60% of gold miner costs are directly associated with energy. So that's great. Looking internally, the GDX gold ratio, which is a surrogate here for the HUI gold ratio as well, it's still going up. So we don't have a technical indication by this internal view that there's anything wrong or there's any sort of negative divergence in the gold mining sector for the precious metals. So, got to call it as we see it. Even this here is positive for the precious metals and commodities. It's really just the risk, this gold-silver ratio, the risk of a reversal. And it could chop for quite a while before ever bringing the pain of a reversal. So I'm trying to temper the way I speak, but at the same time, I don't want to be asleep at the switch, just pretending everything's going to be happy for us, pleasant, into the indefinite future. Gold miners versus copper miners, I think that's pretty interesting. The gold miners, GDX, COPX, broke out of a base, and now it's in a pretty cool consolidation. I just have a hunch it's going up. It looks bullish to me. If it breaks down, then we could have more problems in the gold stock sector than just something routine or quick. Gold versus inflation expectations. Yeah, so that's not an inflationary picture right there. No single indicator is the be-all and end-all and going to tell the whole story. But if this were dropping, we'd be more on alert for another bout of inflation in the macro. I don't think it's here yet. TSXV, TSX. So Canada's highly speculative index that includes a lot of mining exploration type companies versus the senior TSX, Toronto Stock Exchange. It's ticking a new high here, and I think this is a new bull move in relation. It's also, I have a different chart, a longer term chart that shows that it's at long-term support from somewhere in the past, maybe back several years. I'm sorry, not support, it's at resistance. So that could hold it for a pullback. Might actually work well to pull back to a higher low. But again, like several other indicators, nothing has cracked yet. So let's not get too carried away yet. Global stocks versus U.S. stocks. So there was the long decline inauguration. I had a little fun with this because America great again after all. And this means that America was declining stock market wise versus the average or the global amalgamated stock markets. It was definitely not a positive for the new great America. Then we got a little bit great, we got mediocre, and global stocks are rising again. You don't need me to review the problems going on in this country. If we take out this high right here, I think it's a new phase. So let's just see what happens. Growth stocks versus value stocks. So I'm long several growth stocks and tech stocks, and that means I really want to see this thing catch a higher low here and get off its ass. But that's not happening yet. So I'm watching those positions. I'd be just as happy raising cash, buying more short-term bonds, whatever I have to do to get defensive, more defensive than I am. But I still have a sneaking suspicion that this may find a low, and especially if we get a Goldilocks signal, which would be the US dollar rising, the gold-silver ratio rising, inflation well under control, but nothing getting impulsive. I just have a gut feeling about that stuff. But let's just see how that plays out as well. This could easily have been a top as well, and as it stands, from this high, it's a negative market signal that needs to turn itself around. Now, this would be a negative market signal as well, rising. This one, when it's declining, it's a negative. Healthcare versus SPX is negative when rising, in that it shows increasing defensive behavior by investors. Well, I wouldn't call that any sort of compelling rise off the lows. In fact, it's sagging today. So let's just see how that plays out as well. I have some healthcare positions in biopharma and a couple medical devices, but there's no confirmation of a low here, so we don't have a bearish signal internally. In fact, QQQ SPY goes the other way. It obviously wants to be rising as a bullish signal for the markets, and it's having a little pop today. And that keeps me in some of my growth oriented tech stocks, as well as the old guard, Apple, Microsoft, that kind of thing. For a speculation, for a trade, I'm playing it straight. We've had some real fun as gold bugs, and I just have a feeling a lot of that froth has come out, or needs to come out of it. And people aggressively playing the precious metals right now are trying to go after the scraps left on the bone. Finally, XLYXLP is positive when rising. After the April wipeout, it logically rose, and now it's in a chop pattern here. And I don't really see positive or negative in that. Obviously, a breakdown below this point, and we have an internal negative market signal, and a break above this, and off we go to happy Goldilocks. I'm going to wrap this up. Pardon my informality. I didn't script a thing, and I'm really just testing out how I want to present videos like this. And so I'll put this one in the can, and I'll see you next time. Thank you. Bye.